Now, I recently sat down with Kimmy Moodley, who's the head of underwriting at the ECIC, for a look at underwriting trends on the African continent, as well as the effects of the current global downturn in commodity prices.
As with all downturns, there is an upturn, and so we are just in a cycle currently. But I think Africa is basically a commodity-based economies, and so now with the downturn in commodity prices and the global downturn, etc., of course Africa is affected by that, and we are actually looking at the underwriting policies in terms of looking intricately into each project, and we do take long-term views. So in terms of a longer-term view, we also look at where will the cycle be, what is the projection for the next 5 to 7 years as well. But having said that, in terms of commodities, we are looking at 2 very big deals currently in Africa, and they in the gas sector, and as well as the commodity sector. So, but these are going to come online in the next few years. So, as I mentioned, a long-term horizon view, and so we're hoping to actually close those deals in the next 2 years.
I'm glad you touched on that, because I think for the rest of us, especially myself as a representative of the media, we always talk about the commodity price cycle and the concerns there and the lack of investment, which clearly isn't impacting on the ECIC's mandate to continue to cover some of these investments, given the fact that we can't wish away extractive industries. Yes. But having said that, does this create a unique element to underwriting when it comes to the African continent, given the current cycle and risks that we're facing?
Well, a unique, sorry, you said a unique?
Unique methods and concepts when it comes to underwriting, given the fact that maybe more developed economies like oil and gas exploration in the US might be slightly different. Yeah, well, look, I think it is a global thing in terms of oil and gas. You just need to understand who's the market, who's, the supply and demand aspects of that commodity itself. Then you look at off-takers, etc. So there's a few things that we can mitigate in terms of rolling out a project and underwriting the risks of that project. So, for example, in a project finance deal, which is quite common, is you take a reserve account like a debt service reserve account or a maintenance reserve account, which mitigates the repayability of that kind of structure or that kind of financing. And so we look for those kind of mitigants in a financing structure to underwrite that. So I think with all ECAs you look at that, but you also, in terms of the demand and the supply and the market structure as well, that's also quite important. And also to sensitize, if you've got a financial model with projections, you sensitize those projections with output and with prices as well, to look at how the repayability is going to be done, whether they would be able to repay, is it a sustainable project, etc. So those are the things that we would look at. Very intricate, but an exciting job, I take it, no doubt, that you must have. Yes. But to close off with, Kimmy, if we do take a look at the exposure that the ECIC would like to get to SMMEs and those who are a lot further down the chain stream when it comes to exporting, especially from a South African perspective to the rest of the continent, speak to the entrepreneur or that chief executive of that small to medium-sized entity that wants to export to the rest of the continent as to why working with the ECIC will benefit them in the long term. Well, we do have a product which is small, medium transactions, and we do look at SMEs to that effect. We have a very good criteria, so it's quite it's not rigid, but it sets out what we actually require from the SMTs or SMEs, because it makes work easier, and we have a smaller exposure to them in terms of up to $20 million, which doesn't need to go through three approval processes and so forth. So it's a shorter term in terms of approval processes. We definitely look at growing the SMT business. It is one of our mandates, and always, SMEs are the backbone of an economy, and so ECIC wants to support that trade.